The Petroleum Minister has hinted at a cut in diesel and petrol prices. Petroleum Minister Hardeep Singh Puri said that Indian oil companies will be able to take a call on cutting petrol and diesel prices if international crude rates stay stable. While pricing is a dynamic issue, Puri said that the Modi government has not allowed oil prices to go up since April of 2022. The minister also clarified that Indian oil companies' performance in the last quarter was okay and they have recovered some of their losses. Remaining non-committal on fuel prices, Puri said that the government has now finally shifted the onus of cutting petrol and diesel prices to oil manufacturing companies, the OMCs, saying it's their job, it's a decision they will have to take, and if the crude prices remain stable, you can expect some sort of cut in petrol and diesel prices in a couple of weeks, months time. There is no deadline. Remember, there is no sort of timeline that has been attested to it, but it is an important story because it really concerns you and me, the people of this country. Let's discuss the nitty-gritties of what it takes for oil prices to remain stable. How have oil prices fared? Joining me at this point in time in the studio is my colleague Krishna Kumar. I want to come to you first, Krishna, before we get to go to our external guest who will be joining us very, very shortly. Oil prices have gone down internationally. If you look at crude prices and Brent, stable at about from $140 per barrel in the March of 2022 to $75 per barrel. However, prices of petrol and diesel in India have remained stable. So, Minister there essentially saying is that all the OMCs have pared their losses, and now if the international crude prices remain stable, if they don't go up, it's about time that they should be passing on the benefit to the end consumer.
No, right. So let's begin this by understanding what is the breakup of the petrol price per litre. 49% of it, of the cost of the petrol that you buy of 1 litre, comes from the price charged to the dealers, and that is 49% of it. And then comes the excise duty, which is 34%, and then comes the sales tax or value added tax, which is another 15%. Then you have a dealer commission of around 3%. So this is the price breakup of how a petrol or diesel in a price are fixed. So obviously a cut in excise duty, a cut in sales tax, or a cut in price charge to dealers will eventually result in a cut in the price that we pay for a litre of petrol. And yes, the logic said by the oil minister of the country makes sense, because also you have to bear in mind all OMCs or oil marketing companies in India are run under huge losses that have been accrued over a period of time. So clearly allowing to pare off those losses will be the first priority for oil marketing companies, but we're at a position where those losses have been pared off, and now we are in a situation where there's a possibility of the low global crude oil prices, which means that your raw material price comes down, which means that your overall the price charged to the dealers can come down, and then the overall the price you pay for a petrol in a petrol bunk comes down. So what we're really looking at, for people not to raise their hopes too much, or at the same time keep them too pessimistic. Simply speaking, you can expect a rate cut going forward. It's not guaranteed,
no
but
guarantee.
There are no guarantees in life, as the cliche goes. There are no guarantees in life, but there is a possibility. So you can be cautiously optimistic about petrol/diesel prices coming down. Shweta.
Subhomoy Bhattacharjee joining us, senior journalist. Subhomoy is with us at this point in time. Subhomoy, thank you for taking time out. Appreciate your time here. I want to understand from you, is there a possibility that we're looking at being cautiously optimistic about petrol and diesel prices going down, if at all? What we understand that the minister, when he was making that statement, has remained non-committal, and the onus, of course, is on OMCs. From what the balance sheets of OMCs looking like at this point in time, do you think there is a possibility of a rate cut?
Oh yes, certainly. That's different. Otherwise, the minister would not have spoken about a rate cut. Remember earlier on when he was asked about this sort of thing, he generally said that there are other reasons. Companies have to make up for the losses. And he also said that what we have done is we have ensured that prices do not rise. Now that was, as you were just pointing out, the big thing that the government has done. For 2 years, retail price of petrol and diesel, that is the central government reset prices have not risen. What has changed is the state government prices, the state level excise and others have changed, but the central government prices have remained fixed, which means that if you look typically the Delhi benchmark price, those have remained flat, absolutely flat for 2 years. And that's a huge number of months to ensure that prices don't change. Mr. Puri is now saying that it's up to the oil marketing companies to cut prices, which means essentially the government is now comfortable. Remember, there's an election time,
so it augurs well for the government.
Exactly. So it gives a comfortable. So cutting down prices will, definitely. It's not that it brings in votes, but it makes people feel a bit more easy. And also, since the price of crude in the international market is not expected to flare up this year. When I say this year, I mean this calendar year. You would expect the companies to take the risk of cutting those prices. Yeah.
Okay. It's interesting, Subhomoy, the global oil prices have remained under pressure despite, a surprise output cut by Saudi Arabia, one of the leading OPEC nations. It feels that global oil prices are going to remain under. What exactly is playing up here? What are the factors?
Well, because the US market and the Chinese market are not going to the demand expansion is definitely not going to happen. The course of the quantitative easing, which was the stimulus which was given through COVID and others, that has come off. The effects of the debt crisis has also happened. So you would not expect any flare up happening in the US market. Mm-hmm. And given that, the prices, if US consumption doesn't rise, if Chinese consumption doesn't rise, Korean, Japanese, Indian, so all the sectors are looking very, very soft. The only place where the consumption is actually going to push ahead is, in a sustainably big way, is going to be India. So therefore, the oil markets are definitely not looking at a big boost up in prices unless something very major happens somewhere. That's a prognostication. Yeah.
Okay. But if you look at the oil prices, the crude prices, Brent prices, in the last 1 year, they were at almost $140 per barrel. We're going to play up a chart here very, very quickly, but they were approximately $140 a barrel in March of 2022. They've come down to 75. The same sort of, price benefits have not been passed on to the consumer. Why is that?
No, because when the prices was at 140, remember the Indian companies, the oil marketing companies were not able to raise the retail prices. So even though they were not getting while consumers didn't get the soft prices now, they were also not hit by the hard prices in 2022. As I said, the retail prices had been kept fixed. So that's been a huge thing. A very interesting thing that happened in India is that this is the first time when inflation has come down, as the RBI governor is also saying, though of course it remains a matter of concern. But the fact that inflation in India has come down without any movement of the retail price of diesel or of petrol is a very major change in the Indian economy. It's a remarkable change which has not been seen earlier. Every other inflation episode has always had the price of petrol and diesel moving to create an underlying inflationary build-up, or then gradually coming down to ease up the inflation. This is the first time when a period of inflation has started and then gone down without oil prices domestic oil prices, I'm speaking at the retail level, having played any role. This is a significant change. And that is where, but there's obviously been a cost. The government has paid out 22,000 crore rupees as subsidies to the oil marketing companies. That money has to come from somewhere. So that money came from the general tax revenue. So because of that, now, they were not able to cut prices, but now the government's windfall tax rates have also come down to zero. So you realize that the domestic and the international prices have more or less got into sync. There isn't any windfall profit happening. And because there's no windfall profit happening, the oil companies, whenever they feel that their prices are looking stable and their recoveries have happened and their profit margins are decent, which is actually starting to look now, will be cutting prices. Yes.
Okay. Do you know, I quickly want to understand from your government, of course, has made a very calibrated attempt to control prices, and which is good for the common man out there. But as you pointed out rightly, there's a huge subsidy bill that the government is now paying, which is coming, by the way, from our pockets as taxpayers to OMCs. In the longer run, we understand that free market economics were to govern oil prices. They would change every day. How do you read government's intervention into oil prices? While, as I'm going to repeat this, it's good for common man out there who do not have to bear the burden of a rise and fall in, crude oil prices. The prices for them remain stable. But this essentially is an intervention from the government. How long can it last? How sustainable is it?
Yeah, and also related to the fact is that as long as we keep on doing it, we also take risk on another thing, which is that of the movement towards electrical vehicles. Remember the analysis recently by Bloomberg New Economy calendar shows that India is one of the late movers on the shift of four-wheelers to electric vehicles. And why is that? One of the reasons why that's happening is because the petrol and diesel prices, the cost that the government is doing to keep this economy stable is affecting the government's ability. And I talk of the central government, but also the state government's ability to provide generous subsidy to electric vehicles. So while two-wheelers are getting it, the four-wheelers are not. And that is the cost. So it's not just the cost in terms of immediate today's cost, it's also the cost in terms of what we are paying in terms of our ability to shift our transportation models to electric.
Okay. That's a very interesting point of view there, Subhomoy. Let me quickly bring in Krishna into the conversation. Krishna, essentially what Subhomoy is saying, while you are discounting the price of petrol and diesel by controlling them, by a calibrated attempt made by the government to ensure that the common man does not have to pay a lot in order to fill their tankers with oil for two-wheelers, essentially, it also means that you're hurting ability of general population at large to shift gear from two-wheelers to four-wheelers and to move towards electric vehicles in the longer run.
Yeah, definitely. And also, I'm trying to understand what exactly is the rationale, which is not very clear to me at this stage to even send out a message like this. That the fact that, so far we've paid off losses, and from here on you can expect a possible cut in petrol prices. But all I'm thinking of when I listen to something like that from the Union Oil Minister is that so many people are going to be breathing a heavy sigh of relief, knowing that at least one of their bills will be coming down. Because bear in mind, you've seen inflation keep hitting its maximum targets in the recent time. So definitely a reduction in petrol prices and diesel prices will go a long way in bringing down CPI or consumer price inflation in the country.
Okay. Before I close this conversation, Subhomoy, perhaps a last question to you. Do you see the prices being sustainable? Because there's an concerted attempt made by all OPEC players to keep, to ensure that oil prices go up, to ensure that there's some pressure lifted the global oil prices, but that hasn't happened, despite the output cut by Saudi Arabia. However, do you see there being some sort of sustainability as far as current prices of crude is concerned?
Well, in that equation, there's something enters which is called the gross refining margins. I mean, how profitably are the oil refineries refining the oil, and how much are they earning? And if you look at the April to September, the latest figures of 2022, you see IOCL, BPCL, HPCL, all of them, their gross refining margin has been good, very well, in fact, far ahead of, say, the benchmark Singapore. It's almost been double of the Singapore GRM, which we usually use to measure how much profits the oil companies are making. So essentially, what you answer your question is that it's not just the oil prices. The very fact that the oil refinery companies are now making very good margins should help them to be able to relax the prices and, allow, as Krishna was saying, the CPI to further come down as the price of the fuel eases up in the market. Yes.
Okay. Okay. Interesting. Subhomoy, Krishna, thanks very much for joining with your inputs on that important story. Essentially, the oil minister there hinting that petrol and diesel prices could come down, and that is if oil marketing companies decide to do so. They have registered profit in the last couple of months. The oil minister, of course, hoping that that profit will be passed on to the last consumer, especially a two-wheeler driver who is hoping to fill up their tanks, but for a slightly lesser amount, pay up slightly less in terms of petrol and diesel price in the upcoming months. And now there is no timeline as to when the petrol and diesel prices will come down. However, minister is hopeful. Remember, this is just a year ahead of election, and which essentially means it's going to augur well for the government as it augurs well for people if petrol and diesel prices come down.